Okay, I'll
Hello.
click OK. There we go. Okay.
Perfect. Excellent. Well, hello, everyone. My name is Chris, Partnership Manager here at Bitwave. And today I have the pleasure of speaking with Mel Comer, who is the CEO and co-founder of one of our trusted partners, Fuel3. Mel, thank you so much for joining. How are you today?
Chris, I'm great. It's good to see you, and this combines probably three of my most favorite topics: accounting, digital assets, and Bitwave. So I'm psyched.
Nice. Awesome. I love it. Thank you so much. Well, first things first, I always like to hear someone's story about how they got into Web3. And, I'd love to hear how you got into the space.
Great. Well, back in 2018, I went to a QuickBooks conference, a QB Connect, and they had one panel, and it was on blockchain. And I went to it, and my mind was blown with this technology. I was just slightly aware of Bitcoin at that point in time. But after that, I realized, wow, this is such an interesting area. It's like the internet in 1993 of like you heard about it, but you didn't really know what it was. And I thought I was at the point in my career I wanted to leave the corporate world to do something more exciting. I was thinking of going out on my own to do advisory services, CFO advisory services. My background, I'm a CFO, CPA. And this felt like the perfect niche to jump into. First, I love the collaborative nature of the people. I thought it was going to be really exciting because of the potential developments in this space. And I thought it'd be fun and hard, and it would be a challenge because this would be all new for everyone. So I took the dive, and in mid 2019 started up a firm with a co-founder doing outsourced accounting and CFO advisory for crypto companies. And that firm lasted till 2022. We went separate ways, and that's January 1st, 2023, Fuel3 was born, along with my two co-founders, Wendy Barnabo and Lisa Holloway. And we had some of the same clients, and I used to call it same great team, just a new and exciting name. So we've been in the space for a while, and it just keeps getting better.
It's amazing. We've been working together for a good amount of time now. And congratulations, to see the level of growth that the Fuel3 team has seen over the course of the past year or so. You're hiring and you're adding so much value to this industry that's certainly in need. And it's great to actually try and go through some of those uncertainties. And finally, we have some guidance through FASB and now have a better sense of understanding of how to account for digital assets. But during this bull cycle right now, it seems like there's businesses that might have been on pause last year with adopting blockchain technology now finally have a little bit of certainty of now deploying capital and actually launching their new business. I was hoping that you would be able to provide some insights here in terms of what businesses should take into consideration, at least from an accounting perspective, when they start leveraging upon the blockchain.
Sure. That's a great question, and I agree. That's certainly we're starting to see the benefits of the crypto winter in that like real projects were developed over that course of time, and now there's the possibility that they'll get funded. So that's exciting, and those are the types of new clients that we're seeing. Um, kind of the fundamentals that we start the conversation with any a potential client is let's really understand. Let's understand your business. What's the underlying goal of your business? Because when we're managing and recording their accounting for their digital assets, we really have to understand what the flow of funds is going to be. What generates revenue for them? How do they generate costs, and what that looks like on the blockchain, and what that looks like when it comes into a crypto ledger such as Bitwave, so that we can easily identify the transactions that need to flow to the financials. That's step number one, really getting to understand their business. What we also do is we also take a look at what they've been doing so far in terms of their accounting. At that point, when they're getting funding, the days of DIY are done. And they really need to, from a time perspective, but also from an expertise perspective, is rely on people who are good accountants, who are tech forward, both at the fiat accounting and also with digital assets, and who are deeply, deeply entrenched in the digital market, in the digital asset area, just because there's so many nuances in terms of how you report for things, what the impact is on the books and taxes and so on. So making sure that if a client engages us, we do the cleanup. We get a nice, clean set of financials together so we understand where they're starting at. And then we build processes in to make sure that we can deliver those financials in a timely and accurate way.
Yeah.
And that gets their kind of their infrastructure set up so that they can rely on the reports they're getting in order to be able to make decisions about the business. With digital assets, one of the big learning curves that we've got with clients is to really help them understand the importance of a crypto ledger. Spreadsheets are not an option as far as we're concerned. Get the clients on a ledger and also start helping them understand the impact of their transactions. What's going to be taxable? How do we account for certain transactions? I mean, we have clients whose minds are blown when you start to talk about the implications from a book and tax perspective of an airdrop. Of yes, these tokens wound up in your wallet. You have dominion and control over them, and if there's a market value at the time you receive them, guess what? That's revenue. That may have tax implications as well. So, helping the client learn about the important aspects of digital assets and how they affect not only their financials, but also their tax return is critical.
Right, certainly. And it's interesting to think about that airdrop example. It's just like, all right, like this was unexpected.
Mhm,
Now I have custody of these
mhm,
assets
mhm.
here. What am I going to do? Since this is reportable income, should I dispose of these assets? Should I liquidate that into fiat? Is there some strategy that I can implement with these tokens now? Can I stake them, maybe generate some additional yield? Um, and really interesting to think about that and how that can really increase the level of complexity with certain business models when acquiring different types of digital assets. So definitely appreciate the insight. And it's certainly a really exciting time in the market right now. The market's pumping. I love the innovation in the space.
Mhm.
And since you're working across so many different Web3 companies, I was wondering if you could share some trends that perhaps you've been picking up on during this most recent bull cycle.
Great question. One of the trend, this has been a consistent trend, is that as startups and either funded and looking for more funding or going to get some funding, is really managing your burn rate and managing your runway. And part of the challenge of that, if you're dealing in digital assets, is understanding the implications of what your treasury looks like. So for instance, you may be sitting on, Bitcoin has pumped a lot, ETH has pumped a lot, Solana has pumped a lot. You may be sitting on a lot of gains in those accounts, long term, short term. And so when you look at your runway, you really want to balance, what am I going to hold in stable coins? What am I going to hold in cash? What am I going to hold in the native tokens that I'm using in my project and in my business? And that takes a lot of focus to really think that through and to analyze where you're at. And one of the things we like to help our clients with is we don't give them the answer on you should liquidate your Bitcoin now and you'll have this gain, is really helping them think through a strategy about that. What's the way to de-risk the Bitcoin or ETH that you're holding that has appreciated greatly, but also not de-risk it to the point where you're missing out on potential further market gains in there. So it's a balance, and we get in to reviewing with the client the different liquidation strategies from a tax perspective, whether you just want to use FIFO across the board, fine. LIFO you can use also, probably a little less common, but certainly from a tax perspective, there may be some opportunities there for you. You could use HIFO, specific averaging. HIFO is another form of specific identification, rather, and to really look at your portfolio of what you're holding and come up with a sound approach to how do I save some native coin for upside in market growth, but at the same time, my runway is all I've got to use to bring my product to market or to grow my business in order to generate revenue, and generate additional funding. So fundamentally, I'd say good financials, timely and accurate, and managing your burn rate are probably the two trends or themes we see across just smart business management.
Amazing, super insightful. And we've actually just had some additional in-house training over here to talk about, um, it's called wallet level inventory. So typically we've seen a lot of businesses create a single inventory of all their digital assets across all of their different digital asset sources, assets perhaps held within cold storage, um, a hot wallet, within an exchange, custodial provider, etc. But what we've noticed is that there's certain advantages if you can actually keep a treasury wallet of low cost basis tokens, and then perhaps another wallet where there's more activity, buys and sells higher cost basis tokens. With wallet level inventory, you could be like, I want to run FIFO just out of this wallet with the high cost basis and not dispose of my low cost basis tokens. With that level of strategy, you can imagine how there's the potential of lowering tax liabilities as well. Super interesting stuff. And it's because of experts like yourself, Mel, and your team that we can share this insight with our community, because that can make a profound impact on our country.
Absolutely. Absolutely. Yes. Especially now with prices going up, it's an opportunity to really lock in, lengthen your runway, but also keep some in reserve so you can have some upside with with the market going up, and also manage your tax bill, because we've had clients that haven't been paying attention. They have some ugly tax situations where they've created taxable income that they didn't intend to.
Right. Yep. Yep. So, lastly, it's always good to ask. I would love to learn more about what makes a good client for Fuel3.
Um, that's also a really good question. And I think to us, probably some of the best clients we have are people that come in and they, number one, they want us to really do the accounting. They know they've taken it as far as they can. So they're open to us coaching them and us having a point of view on ways for not only the transaction processing to be more efficient, but they're a genuine partner with us. They are as invested in us being successful as we are in them being successful. Clients um, who want to they don't want to spend a lot of time on their financials, but they want to understand them because they know that's key for them to rely on for their continued success in business. So clients that are willing to commit to, let's have a either weekly, biweekly, or monthly meeting, weekly and biweekly, typically for the transaction questions and just to keep a sense of what's going on in the business, and then a monthly review of their financials where we devote an hour and go through where they're at, what things have changed, what things look at. And those to me, a great client comes to those with a lot of questions, and they're interested, they're engaged, and we can have an impact and show them, point out certain things that are, they need to address, certain things that are really going well, do more of the stuff going well, do less of the stuff not doing well, um, and really um, help them to make the best strategic decisions they possibly can.
Love it. Client-centric relationships are crucial. So Mel, thank you so much. Always a pleasure catching up with you. Again, incredible insight and certainly appreciate our partnership. Thank you.
Chris, thanks so much.